What's up, everybody? Matt of Trades here. All right, so today I think I'm going to talk mostly about cost basis, why it's important, and why you should keep track of it. And if you've been following the channel at all, you know that we are trading mostly the wheel strategy here. So this is mostly applicable in the second half of the wheel when you've been assigned shares, keeping track of your cost basis. But before we get into that, first thing we're going to do is I'm going to get into the portfolio, give you a quick update, and then we'll go from there. All right, so this is what my portfolio looks like today. It is May 3rd in the afternoon. Right now, it looks like we're down about a 0.25%. But a lot of the days have really looked like this lately, where I'm up about 2%. I'll be down for 2%, and it's really hard to see exactly where I'll be by the end of the day. But anyway, so talk about the trades that I'm in right now. So I have about 20 puts in Black Rifle Coffee Company. I have 100 shares of Pinduoduo and selling calls on that. 200 shares of Rivian, selling calls on that. I've been selling calls on Gap and Matterport as well, since I own those stocks. So the only puts I'm selling right now are on Black Rifle Coffee Company, which I was actually able to get kind of a pretty good price on this. Every once in a while, if you're looking at your options here, if you go down, sometimes when you go down to where everything's 1 cent, randomly there'll be one that's like worth 5 or 10, and I was able to pick this up at 5 cents at $10 here. Let's see, I think it was 5 cents, and then it went right back down to 1 after I sold those. So that's kind of nice. I'm not too worried about getting called out on this one right now. Current price is $13.84, and the strike is at 10. It is Tuesday today. These expire on Friday. So, and what I like about this trade, even if the price does drop down below 10, there's actually pretty good support. Go back to the stock. There's actually really good support at that 10. Oh, that's my portfolio. Black Rifle Coffee. That's what we want. So this is, let's see, if we go to the year chart, I mean, yeah, that's support. So I'm not too worried about this one. If I do get called, I think it'd actually be pretty good, because then I could get a ton of premium selling calls on this. But anyway, that's where we're at there. Don't want to go there yet. So relative to the market, so today it's showing we're down 0.12%. SBY is up 0.16, so just ahead there. For the week, we are up 3%. SBY for the week is down 0.47, so we're beating the market for the week. The market for the month is down 0.6. For the month, we are down 9.26, so the market's beating us just a little bit. As far as the month goes, for the last 3 months, we are up just under 12%. The market, SPY, for the last 3 months is down almost 8%, so we're beating the market by a ton in the last 3 months. For the year, and this is actually a pretty big deal, so this is the first time SPY has been down for the last year in a long time. It's down almost 1%. We, for the year, are down 3.45. So the market's still beating us just a little bit for the year. So that's where we're at with the portfolio. We're currently about 32,000, almost 700. All right. So I am going to show you my trades for the last few weeks, and what I typically like to do on the shares or the stocks that I've been assigned, and they've gone well below my strike price. Strike price. a lot of traders recommend just hold on to it, don't sell calls on it, because if it does go up and if you have to sell those shares, you're going to sell it for a pretty good loss. But what I'm doing is I'm selling calls pretty far away from the price, and then I'm selling it at 50% profit. So I'm not holding on to them for too long. Obviously, there's always a chance that could go up, and I get those shares called away for a total loss. But I think if you're 85% or 90% probability that it's going to be a winning trade and sell it at half profit, it's pretty unlikely that that's going to happen, which that's going to be chipping away your cost basis on that trade, which is kind of what I want to get into in just a second. But as you can see, so these orange ones right here is where I've actually bought back the call after I've sold it at half, and I've been doing that quite a bit on Riot, my shares of Riot, as well as Gap, and a little bit with Matterport. Mostly with Riot though, and again, the whole goal is to chip away your cost basis. So essentially, what your cost basis um, is the price that you would have to sell the stock to break even at. And so how you find your cost basis, and again, this is only applicable when you're selling calls and you own the stock. So for example, I've been trading the wheel on Riot. I have a trade going on right now. This number right here is showing how much I've collected in premium since starting the wheel on Riot. So to figure your cost basis, it's your initial investment or your average price that you bought the stock, which in this case is $16. I've recently added this metric, but it's $16, and then you times that by however many shares you have, which in this case is 600, and then you minus the amount of premium you've collected, and then divide that by your shares again, and that is how you get your cost basis. So this is my row showing my cost basis right here. So in order for me to at least break even in this trade, I would have to sell my stocks at a minimum of $15.17, which is lower than the 16. Not a lot, but I am chipping away at that cost basis right now, which is good. And I think it's really important to keep this in mind because it'll give you a good idea of what you need to sell your, what strike price you need to sell your calls at when you do own stock. And obviously, the lower your cost basis is, it's going to be easier to make up those gains or make up those unrealized losses quicker. Let's see. Something else I've done on Riot, so this one has kind of ran away from me a little bit. I think initially I had sold some puts at $19. I was assigned that, and Riot just kept going down. So I actually sold some more puts, and then got assigned on those ones too at a lower strike, which overall averaged my cost per share at $16, which is another way to lower your cost base too. Is just simply buying more stock or selling more puts and then getting assigned on that. That's kind of a scary thing to do sometimes, but it's a strategy that I'm probably going to slaughter his name. That Marcus Heitcutter, I think that's how you pronounce his name. But anyway, he's a big wheel strategy guy. If you haven't checked out his channel, definitely worth doing. But he calls that flying rescue missions, where if you're down 30% on your trade, you sell more puts. If you get assigned there, then that's overall going to lower your cost basis and make it a little bit easier to get out in a profitable position. And then, of course, selling calls on that position is going to lower your cost basis as well. And I think I think Riot right now is at about $11 a share right now. So still kind of far away from my cost basis and where I initially my average price that I have those stocks. But I still think it's a good idea do your best to chip away at that cost basis in a safe way. So like I said, selling calls at a safe strike and then selling at 50% profit. Kind of a slow way to do it, but I think in this case better safe than sorry, because you don't want to get those shares called away at a chunky loss. Now, despite, I don't know if you were able to see that, but despite the market being as crazy as it's been, the last 2 weeks, I've been able to take in just over $1,000 in premium, um, which is good. I'd say the biggest takeaway from this video is, again, know how to calculate your cost basis. Again, it's your total investment or your average cost per stock times however many shares you have, minus how much premium you've collected, then again, finish by dividing by number of shares you have, which will give you your cost basis, again, which is the number that you'd have to sell all these stocks in order to break even. And then even again, if the price is getting close to my cost basis, say it goes between my average stock price and my cost basis, say it's at 15.5, I'm probably going to be selling strikes at the 16 because the goal isn't to get out of my trades breaking even. The goal is to get out of my trades profitable. Which if you do have your stocks called away at your average cost, then your profit is going to be just the premium you've collected. And if you can, or if you want, you can sell calls at a higher price than your average cost, and you'll get some capital gains there, which is something that you can look at. But I think for the strategy that I'm running and the plan that I have, I'm just going to sell at the strike price and continue to collect the maximum amount of premium and have my main source of income or gains in this portfolio come from premium from selling puts and calls, and not necessarily capital gains. And I do own a few shares outside of the wheel strategy, but Riot, Rivian, Pinduoduo, Gap, and Matterport are all stocks that I own as a result of running the wheel strategy. Tesla, Berkshire Hathaway B, Black Rifle Coffee Company are all stocks that I bought just because I like the company. Even though I am running the wheel on BRCC, I do own shares on top of that. Well, folks, I think that's everything I have for you today. If you want to follow me on my journey to grow my portfolio to 100,000, like and subscribe. It sure helps the channel. If you have thoughts, comments, suggestions, what you would do in certain situations, feel free to comment below. Just like you guys, I'm learning. I'm by no means a pro or an expert at this, as you can tell by the size of my portfolio. And again, the ultimate goal here, and the series is to grow the portfolio to 100,000, but the ultimate goal here is to actually grow my portfolio large enough to where I could actually do this full time, and obviously be good enough at doing this. Well, until next time.